Well, hello. Yes, getting some artwork in my office. Lovely present from Winky there. Can't go wrong. Children brought me original VHS Star Wars. Can't get wrong with that. Which is actually being converted into a light. Brilliant. Just got to do a trade. Absolutely nothing. It just amuses me in my little den of profit. I'm going to show you a strategy today, guys. So let's roll the intro and go make a coffee. Come with me. There you go, guys. Got the coffee, because I live on coffee, and let's be honest, everybody knows Scruffy likes a coffee, but I also live on the charts. And I live on the charts because I love trading, and I have done even when it was part of my other business. I gravitated to it because I genuinely enjoy it. I like numbers. I live my life on a spreadsheet, as most business owners do. But ultimately, I enjoy the challenge. And it's the challenge of the markets that gets me up every morning and keeps me in front of the screen. Because trading is the one job that every single day you have to be on your A game. And if you're not on your A game, the markets will humble you very, very quickly. And I've said it before in a rant, you know, that trading is a little bit like boxing. If you're not prepared to be punched, don't get in the ring. But while you're in there, you're going to get punched and it's going to hurt. And your whole emphasis of being a boxer is not to be knocked out. You know, you've got to last the rounds. And if you are to survive in boxing, you have to train. And you have to be mentally stable and have enough stamina to stand the course. Trading is no different. You have to train, whether you like it or not. You have to train. Just imagine trying to fly an airplane without any training. It's not going to end well. Trading is exactly the same, you know. But there's a perception out there which I'm trying to sort of dissolve, because you won't find any fake mansions on my videos, no vomit-inducing green Lamborghinis. Good God, it's always a green Lamborghini.
Oh, make it stop!
It's just me, a cup of coffee, and the screen. And when I show you a live trade, everyone thinks that trade happened in minutes. It didn't. Most of my trades take 3 to 5 hours to play out. It's very rarely that will automatically go to target, you know. But the strategy what I'm going to show you today is based on short-term wins and gains. I'm not a big lover of scalping. I do it from time to time when I just want a little bit of enjoyment and I've got a little bit of time. And this strategy is based on a 5-minute scalping. And the advice I'll give you is, don't look to do this all the time. Do it for maybe an hour, or say a couple of setups. Score, score, stop. And remember that. Score, score, stop. Score, score, stop. And it's a good thing to remember, because the biggest account killer in trading is over trading, and scalping is what will do that to you, because you'll get a few pips and you'll think you're invincible. You'll go in again, get 3 or 4 pips, you'll think you're invincible, but then the market bottoms out and it races 40 pips against you. So all of these little quick wins that you've had is suddenly evaporated in one decent sized loss. So if you're scalping, just remember, score, score, stop. Score, score, stop. You know. And what it means is, do twice, stop, have a cup of coffee, go away, do something else, then come back and have another go maybe in the afternoon. And you might get 5 points on one, 5 points on the next, because 10 a day will give you a salary, and come back to it on the afternoon, do 5 and 5 again. You've had 20 points throughout the day, and that'll do you okay. So remember, score, score, stop. And it's a good mantra to have, and have little mantras in trading, because trading is a job, and like any job, you need to be trained. This isn't an easy overnight success story. My trading career has taken 15 to 20 years to get where I am and to have the knowledge that I have. And I still get idiots emailing me every day just wanting the magic pill, and they think they're going to be rich in a week. Don't get me wrong, I get some wonderful emails, and the wonderful emails are certainly more than the horrible ones.
Make it stop!
But the horrible ones are the ones that stick in your mind. And I'm trying to get away from them, you know. So strategy I'm going to show, oh look who's coming. Love of my life. Yes, beautiful. Where were you? You were supposed to have made me a coffee.
I've been shopping.
You've been shopping. There's a shocker. Right. So guys, come with me. We'll jump on the screens and we'll show you what this is all about. Okay guys, on the charts, very simple 5-minute strategy. Okay, works best on fast moving markets like cable, pound versus the dollar, or the pound versus the yen, and it also works best on the London time frame. And what you're looking at is starting at 7 in the morning, which is here, and you're going to finish 4:30 in the afternoon, London time. Okay, so that's your trading day. And why have I picked that? Well, the markets move fastest in the London session because there are 2 crossover points. You have the end of the Asian session coming over into London, and then you also have the London session moving over into the New York session at around 2:30, depending on the daylight saving time, which gives a lot of activity throughout the day, which is ideal for a scalping situation. Now, I know I don't scalp a great deal, but when I do, this is the time frame I'll be looking at. And all you need, once you've defined your time frame, is 2 indicators. And they're very simple indicators. The first one is your 200 EMA, exponential moving average, for those that don't know what it is. And it is only there to be a filter. So if the price is above the 200 EMA, you will only go long. If the price is below the 200 EMA, you will only go short. So that's your first filter to get your direction. Your next indicator is your trigger indicator. This is what's going to give you your trade. Okay, and for this, we're going to use a stochastic. We're going to modify it slightly. This is the standard setting of a stochastic, which is 14 periods back, slowing period of 3, and the D line or the fast line as 3. Okay, and then you have your level set at 70 and 30. So what we're going to do is we're going to change the 14 to 5 periods. Okay, and we're going to get rid of the D line altogether. Okay, because I'm not interested in that. And now what we're looking for is for it to break the 70 and the 30. But we need to know when to be ready. So the way you do that, I always put an extra couple of lines in. I put one at 80 and I put one in at 20. Okay. And then what I'll do is, to make it stand out a little bit, we'll draw a little channel in here, just like so, just so you can see it more clearly when it's time to get in and out of the trades. Okay, and then I'll put another one below and I'll color it green, so it represents, green means going long, red means we're going short. Okay, so just give me a second, I'll just quickly pop them in, change the color of that so we can see it. There we go. Right, so if we go in the green box, we are going long. Go in the red box, we are going short. All right, with me so far? So we start our day 7 in the morning here, and remember the mantra: score, score, stop. All right, so the price moves up and you think, yes, yes, the market's going, it's going, but look, this is all overbought. All right, dangerous. Wait for the market to unwind. So it goes up on its initial drive, and then the market unwinds, and you're following it with this all the time. All right, so the initial drive up, market's unwinding, it's come into this channel, so we're getting ready to place a trade, and it exits here. There's the crosshair. All right, just there. All right, so you can see it. So it's that candle there, or more likely to be this one here. All right, so there's your trigger candle. Place your order a tick above it. All right, just one tick, because you want the market to come to you. Do not chase the market. So we'll move that down. And as you can see, it didn't trigger. So you let this candle close out. This hasn't gone anywhere. It's still in the good zone. Move your order down to follow it. One tick or so above the candle. All right, because you're letting the market come to you all the time. The market's tried to push up, didn't get there, it's turned round, it's come down, but then it's moved up. This hasn't done anything, so you're still in the game. It's triggered your entry, and you're looking for, if you're being conservative, 5 pips. If you want to be a little bit more aggressive, a little bit like the way I am, 10. All right. So let's have a look and see what this next move would have given you. That would have given you 33 pips, and this is a relatively recent chart. This is within the last few weeks. All right, and I picked it so that it's bang in the middle of everything that's going on at the moment, so that it is relevant to what you're looking at. All right, so there's 33 ticks. Now you wanted 10, so you hit that easily. But what if you wanted more? Why don't you try this? When you hit your 10, take half the position on, move into stop loss into break even, and let it run. When it hits 15, take another half off and move the stop loss to 5 points in profit. So you're now being paid twice and you can't lose with profit. All right. When it hits 20, take another half off and move the stop loss up to 10. So again, you're getting profit when you stopped out and you're being paid again. All right, so you're scaling out all the way up. When it hits 25, you do the same process. Move it up 5 ticks, blah, blah, because that's a fast moving candle. So you have to sit there and you think, yeah, right, take half off, wallop, move that up. Half off, wallop, move that up. Till eventually this candle will stop you out. All right. But you've been paid all the way up that candle in 5 minutes. Fantastic. All right. So that's one trade and it's paid you quite well. Now you're letting the market unwind. Get rid of these so that we keep tidy. So you let the market unwind again, which it does all the way, to come down into your interest zone. So it's ended. So you're now ready to wait. Turns round. There's your exit candle here. Same drill as before. One tick above. So the market always comes to you. Okay. Triggers it there because you've got plenty of time to put your order in, because there's the close. It hasn't gone up yet. Let's have a look, see how far we get. 26. So again, do the same process. That is it. Stop. Score, score, stop. So come 10 o'clock, you stop. Go have a cup of coffee. Go watch the telly. Go for a walk. Do whatever. But stop. All right. Now you might stop for the day, which is fine. But say you came back and you think, no, I want another go. So 12 o'clock, you've had your lunch, whatever. Okay. So you do that and you think, right, I'm ready. Let's have another go. So let's have a look. There's your trigger candle. And this is going to give you an idea as to why you stop. All right. You've just been paid very well. Put your candle order in. There. Okay. Just put the ticks above. Yeah, that's the crossover. It triggers, but now you're sitting on heat. Now you're stressed. Because that candle, if that kept on going down underneath here, which is pretty much where you're going to have your stop is going to be on the other side of the 200 EMA. Because with this is an all or nothing strategy. You know, you don't know about your spikes. All right. So in we go, but you get away with it. All right. But if you'd stopped earlier, you wouldn't have had that stress. But anyway, let's just say that you wanted to go through it. That move is 66 ticks. And if you were doing what I was saying earlier on, you'll go scale, 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 all the way up. And that would have paid you incredibly well. All right. Now, depending on your position size, I mean, at the end, you might only be running pennies. But it doesn't matter, because all these pennies add up constantly. Let the market unwind, which it does, back into your zone, which is here. There's your cross candle, which is this little chap here. Say you were late, and it's this one here. All right, where are we at? That one. So it looks like that one's the better or the more logical one for it to be breaking out. It's going to trigger you straight away on the next candle. Remember, you break even at 10 pips. 16. So that will be it. That's your day over. Score, score, stop. Had your break, had your lunch, came back. You had one trade with a bit of stress, and the other one wasn't so bad. But all of them paid you quite well by being patient. So that's a nice, easy strategy. And then that is it for the day. So if you move it over to the next day, just have a a wee look where we are at 7 o'clock. There we are. Just to see what would happen. Okay. 7 o'clock the next day. That's there. Same principle as before. Okay. We know that this zone here, that's our red zone. Our green zone rather. Need the coffee. Where's it exit? It exits this green candle here. So put our order tick above that, which is there. Triggers, screens up, looking for 10 pips. 18. Okay. I'll just widen that up just so you can see it. There you are. So that's an 18 pip move. Price is going to unwind, which it does. Comes down. This is where it gets a bit naughty, because as we can see, the price is actually on the 200 AMA, which now makes you wonder, do I take the trade or not? But the rules say you have to if the price is above or closes above that 200 AMA. All right, so let's have a look. So there's the cross point. It's this candle here. So we shall drop our order on, which is there. This candle didn't trigger it. Closed below the moving average. So you would sit that above the top. Now this negates the trade, because your order is now going to be set below this moving average. So this trade is now over. You would close that position off, because the second that order goes below that line, that is it. All right. So you sit on it. But the price did come back, but you're going to sit and wait, and you're going to wait. And it screamed all the way up there, and I know you'll be thinking, I should have had that, I should have had that. But what if it did that, but going the other way? You'd been in real trouble. And this is why patience is key. Sometimes you've just got to let these things run away. Let them go. Because what goes up must come down. It's the nature of the market. It's the way they breathe. All right? But it unwind very quickly, which it did. Brings you back into the zone. So you're waiting, and it's here. All right, that is there. So, which is our exit candle? This one. So again, you're going to put your trigger line on. There's your order. Remember, your stop loss on the other side of this 200. That's your hard stop, by the way. If you want to kill it, you kill it. But that's going to take you out whether you like it or not. Market's triggered you. It looks like it hasn't gone far, but we'll put on where you need to be. You need to be at least there. So you're sitting on a bit of heat, bit of heat, bit of heat, bit of heat, turned round. So you're sitting on a bit of heat, but the market's turned round, and then it's gone up 26. So you paid. That is it. But the other interesting thing is here. All right. And I'm going to put in a little rectangle to show you. You see, you started here, but the moment that goes into this other zone, you're out. That's it. You know, you're not holding, you get out, because there's a chance it's going to reverse. All right, so it's come in, you're triggered, sat on some heat, it's gone all the way up, and it's into here, 26, you're free, and then you start looking to get out. All right, so that gets up to 15, 16 pips, which is, it's actually on this candle here. So as that's racing up, you close it off. That's it. All right, and that way, that helps you as well. So not only are you hitting a target and you're scaling up and scaling up, you can technically let it run, but that is telling you when that's got over the top of that zone, this is going to reverse, and sure enough, bottom, it did, and it would have took all your profit with it. All right, well, or it would have took you down into break even at least. So just another guy, another idea, you know. But there you go, score, score, stop. So you've had 2 days, decent wins. Simple, guys. And that's what scalping is about. Just because you're scalping and you're getting your quick wins, don't be greedy. Because greed will kill you. You know, and you hear it so many times, fear and greed. You fear of missing out, but then you get greedy because you're overconfident. Just learn to be a bit humble, and the market will pay you, and it'll pay you like a job. All right? So there's a simple strategy for you to play with. Rules, very, very simple. You know, remember, 200 EMA, if it's above, you're long, below, you're short, and you enter using a stochastic on a fast setting of 5, and you're looking at the slow line to break the 70 and the 30. That's pretty much it. All right. But if you like this and you want to learn a bit more, please subscribe. It's the only motivation I have to do these videos. Hit the like button so that YouTube picks these sort of videos up and shows them. And drop a comment below. I'll do my best to answer it. And that's about it. Nice, easy strategy. All right. Play with it. See if you can make some money out of it. And remember, guys, do what you love. Money will follow. I'll see you on the next one.